Good afternoon. Let's do some business. We are doing it live right here and doing more at 4 weekday afternoons. We get right down to business with the news-driven hour after Ben Shapiro. And right before the 790 KBC News Blitz with Randy Wang at 5, it's Mottek On Money, live on the air here at 790 KBC, streaming live online worldwide at KBC.com and your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, and all your favorite podcast platforms. Well, the stock average is closing mostly lower today, with the NASDAQ posting the biggest losses, snapping a 7-day winning streak. The NASDAQ down 141 points today. The S&P 500 slipped 14, both of those coming off of record highs. The Dow, though, managed a closing gain of nearly 300, rising for the third straight day. Shares of NVIDIA moving lower by 3.5% today, racing earlier gains as tech stocks took a hit today. This right after NVIDIA became the biggest company in the United States based on market cap. NVIDIA chips, of course, have been the workhorses of the AI boom, essential tools of the creation of sophisticated AI systems that have captured the public's imagination with their ability to produce text, images, and audio with minimal prompting. This according to the Wall Street Journal. We'll talk more about that in just a moment. We are seeing Russian President Putin get together with the North Korean leader in signing an agreement to deepen trade and military ties. Also, Silicon Valley stepping up a staff screening to counter Chinese espionage threats. We'll talk about that with China expert Gordon Chang coming up here later this hour. But first, on your money, the markets and the economy, with the major averages coming off of record highs. Joining us live now, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, thank you very much for coming to the line, coming off the holiday yesterday, midweek, and right back into the action here. Give us your view of this latest market action here, first of all.
Frank, well, it's great to be with you. And look, the market has been extraordinarily strong year to date. Look underneath the hood, and that strength has really primarily been concerned in two letters, and those letters are AI. I mean, you mentioned NVIDIA, Microsoft. We have these small handful of large cap technology stocks that have really accounted for the majority of the market's gain. Some 60% of the entire S&P 500's gain this year, Frank, comes down to this small handful of stocks. In fact, the average stock this year is down year to date. So it really has been these AI names, these big cap tech names leading the charge, and that's what makes today's potential reversal, I think, so important. I mean, you saw NVIDIA, you saw all those large cap tech open up sharply. Most of them closed down sharply after 7 days of gains. So this could at least be an intermediate term reversal of some extraordinarily strong and overvalued names.
On there live with Jonathan HOENIG, and certainly NVIDIA has been in the spotlight, overtaking Apple and Microsoft as the most valuable company. We'll have to see how the dust settles and whether that is still the case today after NVIDIA's drop of nearly $5 today, down nearly about 3.5% today to $130.78. This is a stock that has moved higher since the 10-for-1 stock split. Jonathan, what is your view on the Magnificent One here? Let's focus on NVIDIA some more here.
Well, wonderful company, Frank. But when you're buying a company, you're buying a valuation, and even after today's reversal and drop, the stock's still up some 171%. Just the last 6 months, up even more dramatically, some 3,000% in just the last 5 years. The value of NVIDIA, Frank, the company now exceeds the entire stock market capitalization of Germany, of France, of the United Kingdom. So, we very well might see a tremendous company, but a stock that's just simply come too far too fast. I mean, here, as I said, when a company's up 200% in just the last 6 months, and what worries me even more, Frank, is, again, not a pessimist, great company, but the concentration of these names. And you've got just a small handful of stocks. Top 10 stocks now account for 30% of the entire S&P 500. That's the highest concentration since the 1980s, and NVIDIA is really at the heart of that. Great company, but from a professional perspective, I think it's come too far too fast.
On there live with Jonathan HOENIG, it looks like some of the retailers got attention today. TJ Maxx, Walmart, which has been hitting record highs lately. What about the retailers here?
It's certainly surprising, Frank, at a time with which the the average American credit card debt is near an all-time high, credit card interest rates at an all-time high, you're seeing exactly that. A lot of retailers simply breaking out here. Walmart, TJ Maxx, both names you can own. We've talked about Abercrombie and Finch, and some of the more specialty retailers have been breaking out. I think the point is, if you're putting money to work, you really want to do your best, if possible, to avoid those tired Mag 7 names. Great companies, but simply are overvalued. On average, Frank, they're trading for about 30 times on a PE basis. The rest of the market, only 15 times. So you want to buy strength, you want to buy leaders, and I think you'd much be better served buying Walmart or TJ Maxx now than Microsoft, NVIDIA, or even Apple, given recent trends.
All right. Interesting to note that the Dow suddenly came to life today while the other averages have pulled back. The tech names are taking a hit. We've seen this disconnect between the Dow and the NASDAQ, which has been very interesting. Haven't seen a new record high for the Dow in a while anyway. It hit above 40K and did bounce today, but we've been seeing the S&P 500 and the NASDAQ lead the charge. What if anything, does that tell us about the market at the moment?
Well, really how narrow it's been. Bespoke Investment, Frank, had an interesting stat. More than half of the sectors of the S&P 500 haven't had a new high in at least 2 months. So most stocks, in fact, have been doing well. As you said, the equal-weighted S&P 500 is a handful of names. So, look, if you want to be, and you should always be an investor looking not, 6 days out, but, 6 months, 6 years if possible. If you're really putting money to work for the long haul, Frank, my sense is opt to those areas that aren't necessarily in focus. NVIDIA is a great company, but the fact that it's in the news day after day after day oftentimes tends to correlate at least with a near-term top. So, over at capitalspig.com, we're looking at small cap, we're looking at value stocks. 2 ETFs I like in those spaces are VB and VTV, and also a lot of the Asian stocks, Frank. AIA is an ETF that tracks the biggest Asian growth companies. Maybe not as flashy or in the news as NVIDIA, Microsoft, and Apple, but they're trading at lower valuations and in many cases are even stronger on the chart. So now's a great time to truly diversify beyond those magnificent stocks that are in most of our portfolios as it is.
All right, we'll be talking to China expert Gordon Chang shortly, who also is a tech watcher, and we're seeing this story on the front page of the Financial Times today. Silicon Valley stepping up staff screening to counter Chinese espionage threat, and of course the big story today with North Korea and Russia getting closer with this military aid pact. Certainly the geopolitics heating up, especially as it relates to that region now. Any thoughts about touching anything China-related or for Asia-related at this point?
Well, the most successful countries, Frank, the most prosperous for all, are always the most free. And, look no further than, Russia and North Korea, terrible countries, terrible anti-capitalist, anti-individualist cultures. We should be thanking our lucky stars. We live still in, a very much a free United States, which gives birth to companies like these magnificent technology concerns that have changed the world. So, I'm not putting money to work in China, certainly, but Frank, I do think you can buy a lot of the energy-related stocks. They've been laggards this year, but even a simple name like DBE, that's David, B as in boy, E as in energy. It's an ETF that holds a basket of energy, fossil fuel energy names like crude oil, natural gas, heating oil. Again, it's kind of taken a breather as of late, but if this is anything like that period of the 1970s, energy was really the only sector that did well, and a lot of these commodities could soar if inflation can spike once again.
All right, we talked a lot about gold this year. It hit record highs of silver, and some of the other metals have made moves. Any views on those at this point? Any adjustment to your views on gold, silver, and the other precious metals?
No, Frank, I think you want to own all three, and I'd add platinum to the list as well, PPLT. Don't make it an all or none. That's where people always go wrong when it comes to investing in anything, gold or Bitcoin or Beanie Babies. They make it an all or none. But for one part of a portfolio, And price is primary, Frank, as you know, and the fact that gold hit all-time highs just a couple of weeks ago, a couple of months ago now, that's a bullish indicator. So I like gold. I like SLV, that's silver as part of a portfolio. And really, I think for the most interesting play in precious metals, PPLT, that's the ETF that tracks platinum, trading at less than half the price it did back in 2008. And as they say, Frank, a rising tide lifts all boats. So I think if you're really in it for a couple of years play, gold, silver, and platinum, or you're going to make money in all three.
All right. Any other specific places where you are putting money now and or taking it off the table?
Sure. I mean, again, it seems so boring in an age of fantastic, microprocessors from NVIDIA, but the ticker symbol CUT, that's C-U-T, Frank, this is a basket of timber-related companies. And, International Paper has been one of those value-oriented stocks, been hitting new 52-week highs nearly day after day after day. So, this could be an era, even if the flashy big cap tech stocks falter, where the good old-fashioned value-oriented dividend-paying stocks like International Paper and a lot of those forestry names, I think could serve investors well. So CUT is on my list. That's C-U-T over at Capital's Pig. Of course, you always want to do your own due diligence, but now's the time, I think, to quote Benjamin Franklin, Frank, think of the three most things you need most, the three things you need most in life: an old wife, an old dog, and ready money.
Sage advice there. On the air live with Jonathan HOENIG. And what about the cryptos and what you're seeing happening? I'm not sure you have the laser eyes on yet, but I know you watch what's happening with Bitcoin and the other cryptos. There's a lot of buzz about the possibility of Ethereum being next up to bat on the ETF scene. What do you see developing there?
Well, Frank, I have to say I've been surprised and impressed with strength in a lot of the Bitcoin-related stocks. Oftentimes the stock market will lead the physical market. We saw that with gold, for example. The gold mining stocks led the physical metal, and we could very well be seeing the same thing with crypto. BKCH, that's BKCH. That's an ETF that has a basket of crypto-related mining stocks. So, for one part of a portfolio, Frank, you always want to buy strength. And the fact that a lot of these crypto names, and Bitcoin in particular, have not only held up, they've outperformed in recent weeks, it suggests that perhaps that trend isn't over. So don't make it all or none, but I would not fight the tape. Crypto looks like it wants higher from here.
All right. And anything else here? What about the dollar strength, which has also been impressive? And despite that, we're seeing oil move up, and precious metals have held up pretty well. What do you see happening with the dollar?
Yeah, the time will come, Frank. I do think that longer term, the dollar strength is in question. But, boy, it's been on a massive tear. And, look, for understandably why, as we talked about. I mean, America, with all of its faults, all of its political issues, is still the most free, capitalist, individualistic, creative society in the history of mankind. That's what gives us these technological advances. So for one part of a portfolio, if you're looking to hedge the dollar, I do like our neighbors up north. That is the Canadian dollar, FXC. That's Franklin X-Ray Charlie. That's an ETF that we own over at capitalspig.com. Frank, it actually is like buying an exposure in the Canadian dollar. And if you're looking for something that's not correlated to the S&P, now might be a time to look at FXC as well.
All right. And any other places where you'd be taking money off the table? Do you still like the move we've seen in the bond market lately, by the way?
Well, the old saying reminds me of the old saying, Frank, when in doubt, stay out. There's so much uncertainty, and I think, Frank, just confusion, mixed signals when it comes to rates right now. I mean, the yield curve is still dramatically inverted. You should be not, finance suggests, the classical finance suggests you shouldn't be getting paid more on a 3-month T-bill or 3-month bond than you are than on a 10-year bond, but you're still earning, a 5.3% in a T-bill and less than 5% on a 10-year bond. So, Frank, we've talked about it over the last couple of months. I think that old adage, as you said, T-bill and chill, given the uncertainty on inflation and the Fed, is probably not a terrible idea for a portion of one's portfolio. And the ETF I like in that space is pretty easy to remember as well. It's BIL, B-I-L, a great cash equivalent when there's nowhere else to hide.
Terrific. Jonathan Hoenig, thank you very much, as always, for that very thorough assessment of things here. We always do appreciate it, and great job, as always. Jonathan Hoenig, of course, great contributor here, but also Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, thank you again very much for coming to the line this afternoon.
My pleasure. Thank you, Frank.
Thank you very much, and we'll check where the action was today in just a moment. But right now, let's check your ride. A lot of action out there in the freeways right now here at 790 KBC. Folks, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. Now, we're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's important to know who to call first. Clark Fielding became an attorney to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident. So all you have to do is hit dial. Believe me, you'll feel a lot better having set this up for yourself and your family. The number to call, 833-88-SHARK. That's 833-88-SHARK. With the population exploding and increased vehicles on the freeways, be proactive. Prepare for the worst and expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com.
Good afternoon. Mottek On Money continues here, 790 KBC. We're cooking with fire now. The major stock market averages did close mostly lower today. The NASDAQ took a hit today. Tech names moving lower after hitting record highs ahead of the holiday break. We had the national holiday yesterday, Juneteenth. And ahead of that, both the NASDAQ and the S&P 500 had rallied to all-time highs. Pulling back today, the NASDAQ down 141 points and the S&P 500 down just about 14 points. The NASDAQ now stands at 17,721 and the S&P 500 at 5,473. The Dow came in for a closing gain, though, of 300 points, settling at 39,135. The Dow coming to life and for the third straight day higher. Shares of the Magnificent One, NVIDIA, moving lower today by 3.5%, erasing earlier gains we saw. NVIDIA, of course, took the distinction of being the most valuable company in America ahead of the holiday break. Market cap swelling to top Microsoft, as well as Apple, of course. And NVIDIA became the most valuable listed company in the U.S. this week due to the demand for its AI chips, as we've been talking about, leading the tech boom that brings back memories from around the start of this century. So the Magnificent One has been on a roll, but did pull back by more than $4 today. The stock's been moving higher up until now following the 10-for-1 stock split. And we've, of course, talked a lot about NVIDIA, and rightfully so, given its meteoric rise. So we'll continue to do that. Apple, of course, has also had a good run lately. It's been at record highs. Let's see if we can pull up the latest quote here on Apple. Apple shares today also lower by nearly $5, back to $209.68. Apple also hitting record highs recently. Let's take a look at some of the cryptos here while we have the chance now. Got our computer system back up and running here now as well. So let's take a look at, for example, Bitcoin. The big dog in the crypto space, Bitcoin down about $30 now at $64,939. Ethereum down 14 at 3,510. And let's bring up the latest on Doge here, which is fun to say and fun to quote, down to 12 cents here, Doge at 12 cents. Taking a look at the price of oil today, it has moved higher, up 77 cents at 82.34 a barrel here at the moment. Gold also higher, up nearly about $4.50 higher to $2,373. And now let's get the latest on the news here on 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. Gorgeous day here in Southern California. How's that checking or savings account looking, though? May not be so gorgeous. A lot of people nervous about inflation, which has taken a big bite, of course, out of savings. And now comes another report that says nearly 3 in 5 Americans are uncomfortable with their emergency savings. 27%, according to the survey, have no emergency savings. That is a 6-year high. Joining us live now is Greg McBride, Chief Financial Analyst at Bankrate. Greg, thanks for taking the call. It's been a while since we've chatted behind live microphones. Wonderful to speak with you here this afternoon.
It's great to speak with you too, Frank. Thanks so much for having me.
Fantastic. Take it from the top and tell us about this latest survey on emergency savings.
Yeah, I mean, the being undersaved for emergencies, that's not new. I mean, that's become as American a tradition, I think, as baseball and apple pie at this point. But what we did see that's really picked up over the last 3 years is the level of discomfort Americans are feeling with their emergency savings. We haven't seen a material change in the amount of savings that people have in terms of measured in terms of month's expenses. But when inflation picked up beginning in 2022, that's where the discomfort really picked up as well. So knowing that savings doesn't go as far as it did just a few years ago has really undercut how comfortable people are with the savings that they have.
Yeah, and that coupled with record high credit card rates too, which it's hardly talked about. With the Fed, of course, still at a 20-plus high, and the benchmark Fed funds rate that impacts the credit card rates, which are pegged to that, right? And that's people are feeling that too.
Absolutely. We see more people carrying larger balances for a longer period of time and doing so when credit card rates are at a record high. So, I think nothing really illustrates the financial strain that millions of households are under better than that. I mean, nobody's financing purchases at 21% interest because everything's hunky-dory. So, credit card debt on the rise at probably the worst time. But that, too, underscores the importance of boosting that emergency savings cushion. That emergency savings, that's the buffer between you and 21% credit card debt when unplanned expenses arise. That's the buffer between you and raiding your retirement account or something like that. Those unplanned expenses in life are inevitable. Having some money tucked away, it's sleep at night money. Nothing helps you sleep better at night than knowing you have that money there in the event of those unplanned expenses.
It's getting tougher and tougher to do that for a lot of people. Coming to you here from the homeless capital of pretty much the world at this point, with a homeless population about 75,000 here in the Los Angeles area, which is higher than the population of most cities in the United States. People are just not able to afford certainly a place, and all on top of that, all the other expenses that you just touched upon. So historically, looks like we've seen a big spike, of course, since coming out of the pandemic and all of that. What is it going to take to turn this around?
Yeah, inflation has really done a number, not only on household budgets, but it's also the number one obstacle to being able to save more. So Americans recognize they need more in the way of emergency savings, and there's a desire to do so. When we in a different poll we find that the top financial regret among younger Americans is that they don't have enough emergency savings. So there's a widespread recognition of this, but inflation has been a major obstacle in being able to really move the needle. Not only has it stretched budgets to the point where maybe income hasn't kept up, it may have already helped eroded what little savings you had, certainly making it more difficult to put the money back in. I want to stress, Frank, that the importance of saving is a lot of that boils down to having that habit and automating it. Setting up a direct deposit from your paycheck into a dedicated savings account. If you're self-employed or maybe you do gig work, you don't get a regular paycheck, set up an automatic transfer from your checking account to your savings account. Have it automated. It happens without you having to think about it. It happens first. That's a far more effective way to build that up over time than trying to save what's left over at the end of the month, because too often there isn't anything left over.
Yeah. So at least savings rates have gone up. Certainly, the good old savings account has a higher interest rate than it used to, of course. So it's a better time for savers, not such a good time for borrowers, right?
Yeah, sure is. Just speaking of it from the saver side, I mean, we're seeing the best returns on savings accounts we've seen in more than 15 years. The top yielding online savings accounts, 5.5%. That's federally insured. It's money you can get to in a pinch. You can link it to the checking account you have at your current bank. So you don't have to change anything about your day-to-day routine. It's just a matter of sending your savings where it's going to be welcomed with open arms and higher returns. And it's not just about those high rates. Even when rates come down, this is still going to be a very good environment for savers for some time because those top yielding accounts, they're earning more than the rate of inflation. The Federal Reserve is not going to cut interest rates until inflation comes down more. So even once interest rates start to come down, savers are going to be in that enviable and pretty rare position of earning more than inflation on that safe haven money for the foreseeable future. So interest rates took the elevator going up. They're going to take the stairs coming down. That's good news for savers, but as you noted, bad news for borrowers. Rates aren't going to come down soon enough or fast enough to really turn a bad situation good. So you have to attack that debt aggressively.
You're live with Greg McBride, Chief Financial Analyst at Bankrate. And as far as borrowing is concerned, do you also track the best cards and that sort of thing? What is considered a good rate nowadays?
Well, if you're carrying a balance, focus in on those 0% offers, balance transfer offers. Some of these last as long as 21 months. That's a great runway, not only to shield you from these really high rates, but a great runway to get that debt paid off once and for all. So if you've got good credit, that 0% balance transfer offer is within your reach. If you have a big expense coming up and you don't have the cash to absorb it, and you're looking to the credit card, there are cards that have that 0% introductory offer for purchases. Same thing, as long as 21 months. So you can use that essentially as a form of interest-free financing for a period of time, but really important to get that paid off in full before that introductory period expires because that rate jumps up to something north of 20% pretty fast.
All right. And for those who have the wherewithal to buy a place, of course, we've seen mortgage rates spike. They've come down a bit recently, mercifully, as those benchmark bond yields have been pulling back lately. But what about mortgage rates and home affordability, which, of course, that's a big part of that, and whether a fixed rate or a good old adjustable, which had fallen out of fashion in recent years but might now be back in fashion, right, if the Fed does lower rates. What are your thoughts about home financing nowadays?
Well, I don't like the adjustable rate option. I mean, a lot of those are, they're set up to they are set up to increase at the next adjustment. Rates have to fall a long, long way before that adjustable rate will actually move lower at the next adjustment. So nobody likes fixed mortgage rates at 7%, especially after we spent the better part of the last 20 years with, rates, below 6, below 5, below 4%. But that fixed rate loan, that's permanent payment affordability, and you've got the option of being able to refinance every time rates drop. So mortgage rates now at 7%, as soon as rates drop to 6.5 or 6, anybody who bought a home in the last 2 years is going to be refinancing in droves. And so as rates drop, homeowners are going to be able to refinance, and some, I suspect, more than once over the course of the next couple of years once those rates start to drop. But don't gamble. That the idea that, well, if rates go down, that adjustable rate mortgage is going to go down. Not necessarily. The way those are priced, they have to fall a long, long way before you see any benefit at all. Better to just oftentimes you have to qualify on the basis of the fixed rate loan to begin with. You might as well lock in the certainty and take that fixed rate, knowing that you've got the option to refinance as rates drop.
All right, great. Well, great to speak with you on all things important to consumers out there. That includes all of us here. Greg McBride, Chief Financial Analyst at Bankrate. Great to reconnect with you here, Greg, and look forward to your next report and your next updates here. Thank you very much for joining us live here this afternoon on Mottek On Money on 790 KBC.
Thanks so much, Frank. Great to be with you.
Likewise. Thank you very much. And right after the freeways we go now, 790 KBC. Mottek On Money continues here in 790 KBC. Turning now to geopolitics. Russia strengthening ties with North Korea and Vietnam. We did get the news that Russian President Putin signed at least a dozen deals with his Vietnamese counterpart today and offered to supply fossil fuels, including natural gas, to Vietnam. All of this during a state visit that comes as Moscow is trying to bolster ties in Asia to offset its growing international isolation over its war in Ukraine. Putin and the Vietnamese president agreed to further cooperate in education, science, and technology, oil and gas exploration, and clean energy. The two countries also agreed to work on a roadmap for a nuclear science and technology center in Vietnam. This after Russia and North Korea pledged to defend each other in the event of an attack. Joining us live now, Gordon Chang, China expert and author of The Coming Collapse of China and the Great U.S.-China Tech War, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for taking the call. Give us your reaction to these epic developments here.
The meeting between Putin and Kim Jong-un in North Korea is certainly significant. We don't know the extent of that mutual defense pact that they signed as part of their comprehensive strategic partnership agreement, but clearly it brings Pyongyang and Moscow closer. With regard to Vietnam, yes, there were a lot of agreements signed, but we got to remember that Vietnam and China are adversaries. Russia and China are close partners. So I think there's a limit to how far Russia can actually move toward Hanoi. So in the sense, the Vietnamese agreements, they're important, but they're not as important as the ones that Putin was able to stitch together in the North Korean capital.
On there live with Gordon Chang, as the Financial Times reports, on his first visit to the isolated communist country in more than 2 decades, Putin thanked Kim for Pyongyang's North Korea support for his war in Ukraine. The invasion and a mutual hostility to the U.S. Have brought the two countries closer together. The West has accused North Korea of supplying arms to Moscow for use in Ukraine. So certainly this visit significant from that standpoint.
Well, it is. Remember that Kim Jong-un went to Vladivostok in September of last year, and that's when really North Korea and Russia put together their agreement, where essentially the North Koreans supplied artillery shells and short-range ballistic missiles to Russia, and Russia probably agreed to provide ballistic missile and other weapons technology to North Korea. So that really set the template. And what happened when Putin went to North Korea just a couple days ago was really to solidify that arrangement. So we're clearly seeing the development of one camp in the world, which is centered around China, but also includes North Korea, Russia, and Iran. And the other camp is the rest of the world, which is starting to be very concerned about what the Russians, the Chinese, the North Koreans, and the Iranians are doing.
On there live with Gordon Chang. And let me ask you this. We don't really get much news out of Vietnam nowadays, but this big visit here of Putin in Vietnam, what do we need to know about their expanding friendship at a time when U.S. companies are trying to expand their operations in Vietnam?
Well, I see that as more as Putin trying to break through the isolation that the West has tried to impose on Putin. Vietnam is already connected to the world through trade and other relationships. So I think the visit was much less important for Vietnam than it was for Putin, because for Putin, this was symbolism. And symbolism is very important now as he tried to show the world that he's very much connected to it despite the invasion in Ukraine. So really, for the Vietnamese, this was doing Putin a favor.
All right. And we are seeing some reaction from Washington. The U.S. State Department said that deepening Russia-North Korea ties were of great concern, while top Ukrainian official accused Pyongyang of abetting Moscow's mass murder of Ukrainians, in the words of the Ukrainian statement. And a spokesperson for the U.S. Embassy in Hanoi, according to Reuters, also warned before the visit to Vietnam that no country should give Putin a platform to promote his war of aggression and otherwise allow him to normalize his atrocities. So we are hearing stronger words coming all over the place.
Yes, but at this point, though, I think there's little that the West and indeed the free world can do with regard to the closing the bonds between North Korea and Russia. We have sort of sanctioned ourselves out. But the one thing that we can do, and this might help at the margins, is really to start enforcing those sanctions and tightening them up on Russia. Because if we can do that, then maybe we can make some headway. But up to now, Russia has been able to evade American and other sanctions, and we need to start paying some attention to making sure that they bite much harder than they have up to now.
And, of course, Iran also being watched closely. The Iran-backed militant group, Hezbollah, and Israeli forces have been trading fire almost daily since the war between Israel and Hamas in Gaza started on October 7th. What about Iran and its closeness to everyone we just mentioned here, North Korea and Russia?
Well, this is something that the United States can actually do something about, because up to now, we have been just defending ourselves from the attacks from the Houthis, for instance, in the Red Sea. We haven't gone after the source of the problem, which is Iran, because Iran backs the Houthis, it backs Hezbollah, it backs Hamas, and behind all of that is China. And we have allowed Iran to continue to sell oil and other hydrocarbons, and we have not enforced the sanctions that were reimposed in 2018. So this really is on us. And I think that if we can make some headway with regard to defanging Iran, then maybe countries like North Korea will start paying attention.
All right, and technology also very much in focus, especially as it relates to AI. On the front page of today's Financial Times, I don't know if you had a chance to see it, but the headline is Silicon Valley steps up to counter Chinese espionage threat. Silicon Valley companies, they report, are escalating their security vetting of staff and potential recruits as U.S. authorities ramp up warnings about the threat of Chinese spying. What's your reaction to that report today?
Well, China has been able to take a lot of technology out of Silicon Valley, either by legal or illegal means. And this really is on us, because it's up to the American political establishment to identify China as more than just a competitor, but as either an adversary or an enemy. And remember, the Chinese call us an enemy, so we should be able to return the favor. If we're able to do that, I think that we can stop a lot of the leakage of technology out of Silicon Valley to China. And that's absolutely job number one for the United States at this moment. So this is something that we should be doing much more of. And we have it in the power because, after all, Frank, this is our country.
And it should be noted, looks like the Biden administration scrapped a Trump administration program called the China Initiative to fight this sort of activity. So looks like that needs to be changed, right?
Well, certainly. The Justice Department needed to do a better job with the China Initiative because although they did make some headway, they did get the prosecution of Charles Lieber, Harvard chemistry chair, and nonetheless, they botched a number of politically easy prosecutions. So, yes, we need to reinstitute the China Initiative, but we need to do it a lot better. And we got to remember that this is not racial, because China's regime has weaponized Chinese nationals and even American citizens of Chinese descent by forcing them to engage in espionage and other activities. The Communist Party runs a top-down system and demands obedience, and the Chinese 2017 National Intelligence Law requires Chinese nationals to commit espionage. So this is not racial. This is just the nature of the Chinese regime, and we need to counter it.
Gordon Chang, thank you very much for taking the call. That is Gordon Chang, China expert, author of The Coming Collapse of China and the Great U.S.-China Tech War, and on X, formerly known as Twitter, Gordon G. Chang. Gordon, thank you again for joining us live here. This is Mottek On Money on 790 KABC.
For the real story behind some of wrestling's biggest moments, it's Something to Wrestle with Bruce Pritchard and Conrad Thompson, too.
It feels like April is release month. When you get through with that set of stories and it's time to set a new course for the next WrestleMania, and that makes sense if you're going to do what Jim Ross would call a roster purge.
Taking a look at your corporation a couple times a year and realizing that some strength over here, or you need to eliminate some. That's all it was.
Something to Wrestle, wherever you listen.